Welcome back to our channel, where we bring you the latest insights and analysis on precious metals. Today, we'll take a deep dive into the current state of the gold and silver markets, exploring historical patterns, industrial demand trends, and the potential seismic shift in market leadership from gold to silver. With expert insights, including those from renowned investor Rick Rule, we'll break down why many believe the next few years could present a massive opportunity for silver investors. We'll analyze the relationship between gold and silver, explore why silver often lags behind but ultimately outpaces gold in a bull market, and discuss how rising inflation, geopolitical instability, and industrial demand are setting the stage for a potential surge in both metals. But first, don't forget to subscribe to our channel and hit the notification bell for timely updates on gold, silver, and other crucial market trends. Historically, gold has been the go-to asset during times of economic distress. It's often the first precious metal to rally when fear and uncertainty grip the market. This is because gold has long been seen as a safe haven, a reliable store of value when inflation erodes purchasing power or when geopolitical tensions escalate. In the early stages of a precious metals bull market, gold typically leads the charge, driven by risk-averse investors seeking to protect their wealth. In 2024, we've witnessed this pattern play out once again. Gold hit an all-time high in October, driven by rising inflation concerns and a weakening economic outlook in major markets like the United States and Europe. Investors flocked to gold as central banks continued to purchase significant amounts, signaling a lack of confidence in fiat currencies. This demand from both institutional and retail investors has helped gold prices surge to unprecedented levels. To understand why gold leads, we can look back at major financial crises. During the 2008 financial crisis, for instance, gold prices surged as investors lost faith in the stock market and sought the stability of physical assets. Similarly, in the 1970s, the U.S. experienced stagflation, a combination of stagnant economic growth and high inflation. During this period, gold prices soared from $35 per ounce to a peak of $850 per ounce by the end of the decade. This 24-fold increase was a clear indicator of gold's capacity to preserve wealth in times of severe economic stress. Rick Rule often emphasizes this historical trend, noting that gold is typically the first metal to rise because it is driven by fear-based buying. When uncertainty is high, investors prioritize safety, and gold is seen as the ultimate form of financial insurance. While gold takes the initial lead in a bull market, it's silver that often provides the most explosive gains. The transition from gold leadership to silver leadership is a well-documented phenomenon in precious metal cycles. Rick Rule points out that silver usually lags behind gold at the beginning of the bull market, but once it starts to move, it does so with incredible speed and momentum. There are a few reasons why silver tends to lag behind gold initially. First, silver is not seen primarily as a safe haven asset in the same way gold is. Instead, silver's price is more closely tied to its industrial uses. This means that while gold benefits early from fear-driven investment, silver's rally often comes later when industrial demand begins to pick up, and when generalist investors start to notice its undervalued status compared to gold. In the 1970s, silver started the decade at around $1.25 per ounce. It wasn't until the latter half of the decade, as inflation soared and gold had already made significant gains, that silver began its dramatic rise. By the end of the 1970s, silver had surged to $50 per ounce, a 40-fold increase. This lagging but exponential growth pattern was seen again in the 2000s. During that decade, gold rose from $253 to $17 per ounce, while silver jumped from $5 to $50 per ounce. Rick Rule highlights these historical examples to illustrate that while silver may take longer to gain momentum, its gains can be far more substantial than gold's once it begins its upward trajectory. He believes that a similar pattern could unfold in the coming years, potentially as early as 2025 or 2026. Unlike gold, which is predominantly held for investment and reserve purposes, silver has extensive industrial applications. This is a crucial factor that differentiates the two metals and can drive silver prices higher, particularly in a technology-driven economy. Silver is a critical component in various green technologies, particularly solar panels. The photovoltaic cells in solar panels rely heavily on silver for their conductivity, making it an essential material in the global push towards renewable energy. As countries ramp up their efforts to transition away from fossil fuels, the demand for solar panels, and consequently for silver, is expected to soar. Additionally, silver's excellent electrical conductivity makes it a vital material in the electronics industry. It is used in semiconductors, electric vehicles, EVs, and a wide range of consumer electronics. With the global trend towards digitalization and electrification, especially in the automotive sector, the demand for silver is poised to increase significantly. According to the Silver Institute, global silver demand is projected to reach 1.2 billion ounces this year. This represents one of the highest levels on record, underscoring the growing industrial appetite for this versatile metal. One of the most compelling factors supporting a bullish outlook for silver is the growing imbalance between supply and demand. While industrial demand is rising, silver production has struggled to keep pace. The challenges in increasing mining output, coupled with dwindling reserves, have created a supply deficit. This deficit, combined with surging industrial demand, could lead to significant price increases as we move towards 2025 and beyond. Rick Rule believes that this supply-demand dynamic will be a major catalyst for silver's next big run. He points out that even a small increase in investor interest can lead to outsized price gains, given the relatively small market capitalization of the silver market compared to gold. Investor sentiment is another critical component in the precious metals market, particularly for silver. Unlike gold, which benefits early from fear-driven buying, silver's rally is often fueled by a shift in sentiment among generalist investors. In 2024, we've seen a curious trend in the silver market. Many high-quality junior silver mining stocks have already experienced significant price appreciation, despite the fact that silver itself has not yet seen a major move. Rick Rule refers to this as the coiled spring effect, a scenario where investor pessimism leads to heavy selling, pushing stocks to extremely undervalued levels. When sentiment shifts, as it has begun to do this year, these stocks can rally dramatically, even before the underlying metal prices move significantly. This early rally in junior silver stocks is often a precursor to a broader market movie. It suggests that investors are positioning themselves in anticipation of a silver surge, reflecting growing confidence in the metal's long-term potential. Looking ahead, many analysts and market experts, including Rick Rule, are optimistic about the prospects for silver. While the exact timing of the transition from gold to silver leadership is uncertain, the fundamental factors are aligning for a significant silver bull market. Gold will continue to play its role as a hedge against inflation and economic uncertainty. Despite the dollar's current strength against other currencies, its real value is declining, especially when adjusted for inflation. Holding U.S. Treasuries, even with yields of 4.4%, results in a negative real return when inflation is taken into account. This erosion of purchasing power makes gold an attractive alternative for preserving wealth. However, silver's dual role as both an industrial metal and a precious metal gives it an edge in a growing economy. The increasing demand for green technologies, coupled with a limited supply, sets the stage for potential explosive price movements. Rick Rule believes that if historical patterns repeat, silver could experience dramatic gains, potentially outperforming gold by a wide margin. In conclusion, while gold remains a strong choice for investors seeking stability and a hedge against inflation, silver offers a unique opportunity for those looking for higher returns. The industrial demand, historical performance, and shifting market dynamics suggest that silver could be on the brink of a major rally. As always, it's important to conduct your own research and consider your risk tolerance before making any investment decisions. We'd love to hear your thoughts. Do you think silver is ready to take the lead in the precious metals market? Share your views in the comments below. Don't forget to like this video, subscribe to our channel, and hit the notification bell for more in-depth analysis on the gold and silver markets. Thank you for watching, and stay tuned for more updates and insights.